Everybody, welcome back to Ox Talks. Thanks for watching the show today and supporting the channel. So what happened today? Markets sold off. Stock market got hit pretty hard. Cryptocurrencies got walloped. The 10-year bond, there was a buying frenzy in the 10-year, flight to safety, call it what you will. Gold finished up darn near back close to 1900 at $2,893 an ounce. Think about it, about $30 an ounce. A lot of uncertainty in the markets. So let's see, Dow finished down 650 points at about 10 minutes before the closing bell. At one point, I saw the Dow Jones down over 920 points. The S&P finished down 104, and the NASDAQ finished down almost 500. You guys leave your comments below. I believe the NASDAQ is down net about 6% or more, 7% in the last week or so. I saw someone on YouTube earlier say the Russell 2000 is already in a correction territory where they had a 10% or more decline in the last whatever number of days. And the S&P is not too far behind. Yes, Bitcoin, Ethereum, XRP gave back a good portion. In some cases, all of what they picked up yesterday after Trump came out and announced the crypto reserve news. So like we've discussed on this show many times before, cryptocurrencies, at least for now, are trading in tandem with the overall stock market. So what happened? Well, from my layperson perspective, we had two things that happened today that set this catalyst in motion after Friday, what appeared to be maybe a regaining of some momentum after you had bigger sell-offs in the week last week. Well, there was no follow-through, and let's see if there's follow-through to the downside tomorrow. Two things. First story out of the Zero Hedge this morning. We got news from the Atlanta Fed slashed GDP forecast again after small dip in ISM manufacturing survey. Listen to this. It says in the piece, PACE, of 2 business days, the Atlanta Fed's GDP now forecast for quarter 1 2025 has collapsed from plus 2.33% to a negative 2.85%. That's a stunning 510-point plunge in growth expectations. So if these numbers hold, what that means, or if they're accurate, the projection, that means that first quarter GDP growth is going to be negative 2.825%. It says today's drop to a 2.825% contraction is the worst forecast for GDP since the COVID lockdowns in 2020. It says Friday's plunge was blamed on the trade deficit. The January goods trade deficit fell to a record $153 billion to the negative, minus $153 billion, versus expectations of $116 billion. Says, as we share below, courtesy of Macro Bond, the monthly decline of $31 billion is more than double any other instance since 1955. Imports, it says, rose by 12%, while exports increased by 2%. The steep decline in the trade deficit is primarily due to U.S. companies front-running tariffs, and I'll share the second part of my reasoning for the drop today in a second. It has to do with the tariffs. It says the steep decline, mainly due to tariffs, will likely normalize over the coming months. The import demand will be less than typical as inventories for specific products are now bloated for those front-running the tariffs. And guys, we'll see. We'll see if this tariff talk follows through. As of a couple hours ago, story I saw from CNBC, and it hit just about a half an hour or so before the markets closed, maybe a little bit more than that. And that is, from my perspective, what sent the stock market, the markets as a whole, kind of really careening, down. And CNBC says Trump dashes hopes for last-minute Canada and Mexico deal ahead of 25% tariffs. And it says President Donald Trump said the U.S. will impose 25% tariffs on Canada and Mexico. Supposed to be, I believe, midnight tonight, starting to midnight or 12 a.m. Tuesday morning, scrapping hopes for a last-minute deal that would avoid stoking a trade war with America's top trading partners. Trump, while speaking at the White House on Monday afternoon, said there was no room left for Mexico or for Canada to negotiate on the new import duties. He says they're all set to go. They go into effect tomorrow. Stocks that already trading in the red sank further following Trump's comments. He confirmed last week that the paused tariffs would go back into effect Tuesday. And he was blaming the illicit drugs still pouring into the country from Mexico and Canada at very high and unacceptable levels, he said. He also said, this is a big deal, or announced that an additional 10% tariff on Chinese imports would take effect the same day. Earlier today, on Monday, Commerce Secretary Howard Lutnick suggested that while Trump would take executive action on Tuesday, he might soften his tariff demands. That did not happen. So, the markets continue to react negatively to this tariff situation. You guys can leave your comments below whether you think it's good or bad, whether you think it's needed or not needed. Obviously, if you are fully invested long in the stock market, you're not a real happy camper right now. Similarly, if you were excited yesterday about the massive crypto pump, that's pulled back, and so hopefully everybody is exercising caution and diligence with whatever investment strategy they're choosing. I know many of you, many out there, are just struggling to put food on the table at a time when the inflation continues to go up. I understand that. I read and I see your comments, and and general sentiment right now is really difficult. So bumpy road, a lot going on. Tariffs going to affect midnight tonight, at least as of right now, and let's see what happens. I believe that for number one, if we do actually get negative GDP for the first quarter, if we get a second negative GDP for quarter two, I believe that is the official, at least it used to be, the official definition of recession. Right now they've modified, changed, tweaked the definition of recession. But again, not an economist, but we're going to have to see how this plays out, and how much more pain, there will be ahead. Hope you guys, are doing the best you can under the circumstances, being prudent, being smart, trying to pay down debt if you're in that situation, not get or take on new debt that you really don't need during a very uncertain time, and during a time where we know job losses are getting worse and they're going to accelerate, and we know inflation is getting worse and probably going to accelerate. Okay, not a good time, in my opinion, to be buying a home right now. I hope that you guys are just paying attention to what's going on. Keep your eyes wide open, your ears open. Spread this word with people as far and wide as you can. I appreciate you all. Have a great rest of your day. I'll talk to you soon. Bye.